This is going to be a bit of a long video. I was 25 and invested. I'm actually 26 now, so I'm not going to change the name. This is when I started investing, and this is just going to be a full disclosure of my portfolio. We're going to take a look at each thing that I own. I'm hoping that this video will take about 10 minutes. It'll be a little longer. I'm also going to go over what YouTube I watch. I think it's important to know, where I am and where I get my information, and not that I think that you guys should do the same, but if, maybe we have something in common, maybe you guys have something you can add for me. I'm a new investor. I have $34,000, and a lot of that, by all rights, I made a little while back at a company that I used to work at that made industrial mining equipment. They let me work as much as I would like. And if I could work as much as I would like, I pounded in so much overtime. I ended up making very good money. And, my significant other at the time, she is 100% behind me in doing my own stock portfolio and doing my own YouTube. And she does YouTube herself. We're very average people, just trying to make it, and I think that my portfolio will represent that, and the new mindset will be very prevalent. So if you guys have anything that you can add, or something that you like, or just questions about why I did something, just send me a message. Damn, like I'm open. I try to be very transparent, and we're gonna start that transparency with Apple. So Apple I bought at an average of 144, and I bought it when they were getting sued and losing their moat, which was having Apple only, having Apple only like apps. So they were losing this, and I only bought 2 shares, and I'm actually a little sad that I didn't buy a few more. You never know. I just started investing at this point, and I only had about 3,000 in, so it used to be about 10% of my portfolio. Now it's only 2. If Apple ever drops down to about 140, which is where I'd like to buy it again, I would like to put in another I'd like to buy 10 shares, essentially. So I'd like to buy about 1,400 or like 1,800 Canadian. I'm Canadian. I'm using wealthsimple, so that's the Canadian brokerage. They're free. I love wealthsimple. They make it very easy to buy and hold, and they don't let you buy options, which I find a lot of people can do riskier things doing that. Not to say that what I do isn't that risky, but it's just a different style, and one that I'm not comfortable with. Just something I'm not comfortable with. Algonquin Power, one of my bigger positions, 916. I'm up 5%. It's actually my biggest loser. So if you go on my TikTok and you followed my kind of weekly updates, this one I kept averaging down in. I bought it when it was about 8, maybe 19 or 20, and I kept averaging down on it because I kept falling below my 10%. So I think I got in, not at the top, but probably about $20. So I never get in at the top, but I don't always call the bottom either. It's just the way that it goes. It's the law of averaging in. Algonquin Power is a utility company. I wanted a utility company and a renewable energy sector. And Algonquin Power went with this huge run up. It kind of peaked out at 22, and then it started dropping from there, and I wanted to pick it up. I mean, I'd like to have picked it up at 17.50, but I think I did a good job in averaging down myself personally. If you don't think so, whatever. But this is just a due diligence on my part. It's a company that I like and I believe in, and it was at the right price, even though the company has a bunch of debt. And I know that. I'm also here for a little bit of a dividend. Not that I think that's the only thing, but I'm comfortable holding something for a very long time like Algonquin Power. Alibaba, which was this was one of my most speculative investments. And actually, I made a little video. I was averaging about 1,000 or $140, 142, I think it was. And I don't have a lot of shares. I have $800. I don't want to make this a large portion of my portfolio. But I was like 30, I think 45% down at one point, and the share price was $75. Against my better judge, actually not against my better judgment, my great judgment said $75, pick up a few more. Just pick up 3 more shares. It's a good to average down when sentiment is completely lackluster. It's just a good mindset to bring to the table of having the balls to average down when things aren't going the way that you expect them to. I averaged down. It did rally like by all rights like 40% the next day, which it's hilarious because you shouldn't expect those types of gains up front, and I got them up front, which means that I was positively rewarded for the thought process of going against the grain. Alibaba, great company, at risk of being delisted. It's still probably one of the most unsure things that I've done, if that makes sense to you. Honestly, it doesn't even really make that much sense to me. But the company is a good company that I don't have to know a lot about, and you'll kind of get this. I don't exactly know a lot about every company that I own, only that the books are sound and the price is not great. It's not or rather the price is good, but the valuation is not what it should be. And that's just something that I have been looking at myself, and you'll see later when I'm going through my resources, you'll see why, what I do to look at these. I'm not going to go through the Webull, but I do use Webull a lot to look up or earnings reports. But anyways, mostly YouTube. So we're going to say Alibaba, 8 shares, just a little bit. Fantastic. Caterpillar, I bought 1 share, tracker share. I would like to own a bit more Caterpillar. I'm a construction worker. I'm actually a sheet metal. I just signed on for my sheet metal apprenticeship. So, I love Caterpillar machines. I've been driving them my whole life, and the actual stock price is, it's actually pretty good now, but 200 when I got in was quite a low that they were in. Did I expect them to go lower? Yes, that's why I bought 1 share. They haven't gone any lower. That's unfortunate, but you know what? Maybe if they hit a high and then they start to go lower again, I'll start looking back into them. It's just unfortunate that I only bought 1 share. I run the risk of messing things up that I don't want to mess up. So I only buy 1 share, and I only do these weird tracker shares. If somebody looked into my portfolio from outside, they would be like, wow, it's like looking into a messy room. I have stuff everywhere. And that's just the way that I'm rolling. Dream Industrial Real Estate. There are actually 2 REITs on here, industrial REITs that I liked. I wanted a real estate investment trust that I wanted it as a part of my portfolio, and I found 2, Nexus REITs and Dream Industrial, and I bought them, and then they shot up, albeit very quickly, and I would like to average down on them. I really do believe that they're going to drop a fair bit, and when that happens, I'm ready to scoop up. I'll probably triple down on the situation that I'm in if I do find them at a bit more of a deal. So, if it dropped down to about maybe $14, I would probably pitch in 1,000. I'd probably buy another 30 shares. I'd like to have about 50 shares. Dollarama, one of my best performers for, again, I just started investing, and I bought Dollarama as one of my first investments. I didn't even know how to look up what stocks were. I'm just like, Dollarama in the middle of a recession, of course it'll do well. With such a simple mindset, 35% gains. Jesus Christ, sometimes it isn't as hard as we think it's going to be. Do I think Dollarama is going to continue this? God, I don't know, but I'm not going to put any more money in, not until I start learning a little more about the business and why they're making this money. Or if they decide to, drop a big bombshell and buy a bunch of new stores, or buy up like Dollar Tree, or make a big acquisition, and the price drops significantly, maybe then I'll look back into it. But right now, I'm not looking back at this. I mean, I'm gonna hold it forever, essentially. It pays a small dividend. It's a I mean, it's Dollarama. Everyone knows Dollarama, and that was the basis of this first investment, which has done quite well. Empire REITs, again, another real estate investment trust. One of my good friends actually owns almost his whole portfolio is in real estate investment trusts, and I was kind of looking into them. I went through a bit of a fad here with real estate investment trusts in my TFSA, and I bought this guy $38 on average, and it has performed very well. But again, I don't know enough about these to decide if it's at a good price for me to pump more money in, and I don't know enough to I just don't know enough yet. So I'm going to keep it, I'm going to hold on to it and keep it in my back pocket, and when it starts to drop in price, I'll start looking into it, and I'll start deciding if there's a good decision here. Facebook and Google, I'm going to do both more or less at the same time. Facebook, I bought a couple weeks ago. I bought at $312, and then it dropped down to like $200, and I bought two more then. So my average is like $266. It's 4% of my portfolio. I'm 15% down. Obviously not doing that great, but is Facebook going to be around 10 years? Abso-goddamn-lutely. And with the valuation that it's sitting at, it was another one of those plays that I felt comfortable being a little more speculative in. I felt like the room for error versus the speculation was on par. So yeah, that's me. That's what I've been doing. Google, same thing. They're doing a 20-to-1 split. This is 17% of my. It's huge. It's a lot of money, and I was a little worried because in Canadian, that was like $3,600, and I ended up pulling the trigger of buying it because last time it dropped down to 2,600, I missed the boat, and yeah, I was waiting for a 10% drop, and I ended up catching a 10% drop. So I was extra happy going from $3,000 to, Abao writes 2,700. So super happy. I wanted to own Google, even though they're splitting the share price 20-to-1. I'm just happy that I'm in it, and everyone uses Google. I mean, I use Google every day of my life. How could I not say that the company, they have fantastic books. They have zero debt. I'm going to say they have zero debt. They could pay off all their debt. No goddamn problem. Google's one of the best companies. Home Depot. I think I just made a video about this one. I use their tools. I go to Home Depot very, very often. The valuation's coming down because people aren't putting that much money into their homes. It's actually come down 5% from when I bought it. So I'm likely to buy again below 300. I mean, I'm waiting for that. I would like that to be the case, and I would like to have at least 3 shares of Home Depot. Again, $1,000 in almost every company that I'm going to own. And I'll go over that later, why that is. Intel, $800. I'm up 1%. Intel again, which is one of those maybe even valuation traps that a lot of people are caught in right now. I see it. They're building a factory, and I don't expect anything out of this company for quite a substantial amount of time, and that's okay. I bought Intel for a very long hold. Everything that I have, I would like to keep for at least 5 to 10 years, and Intel's another product of that. It was either Intel or NVIDIA, and man, NVIDIA, I built my whole laptop off NVIDIA parts, They're great, and unfortunately, they're super overpriced, and I ended up going with Intel. I'm not looking back on that decision. They pay a dividend. They are a good company. Excellent. Manulife Financial, much the same way as, I put in a bit more money, $300. Much the same way as Intel. Manulife, I used to have Manulife investments and RRSPs through old companies that I used to work with, and Manulife is another company that it's a financial company that I wanted in my portfolio. I wanted it at a good price though, and I think that it is probably going to come down again. It seems to bounce up and down. I'm probably not going to catch it at an all-time low of like $19, but if I got it below 24, maybe even had an average of 22, I would like to keep adding to it. Again, another dividend yielding stock that and financial company that I want in my portfolio. Yeah, Manulife Financial. Microsoft, the exact same as Google. I don't think we need to go into it other than, I bought it in 280, and I will average down, but I won't average up. And I think that I won't average up on almost any one of my positions right now, because I think that things right now are expensive. So as each one comes down, they're not all going to come down at once, or at least, I don't think that will happen. But if they all come down out of order, then I can just snap them up as they come down one at a time. So I'm averaging in at a lower basis. Nexus REIT is the exact same as Dream Industrial. It's a real estate REIT that is moving to solely industrial. I've done quite well. I'm up 20% on 35 shares. I would like to own more, but not at the valuations that it is. I'll probably double down if it gets to $10 again. New Tech, another one. God, I don't know how I found this. This was actually my first invested company. And when I invested with them, they sent me a pamphlet. They sent me this goddamn booklet of New Tech and what it is. And I sat there and I was reading. I felt like a businessman. so like, to make a very average person feel like that, they got a PE of 11. It's expensive. It's expensive for a financial institution. They are, I'd say, almost like a loan shark for businesses, but they also have, I'll be at a great degree of flip-flopping between going up a lot and going down a lot. They're highly volatile, and I think that's because of insider trading. I like the company. Don't kill me for liking the company. I will buy more anyways, and despite like what other people believe, this company's been around for a really long time, and the guy who runs it, he runs a pretty good business, or at least the person managing their shares does a reasonable job. So I'm not looking back on New Tech. I would like to buy it. I'd like to buy it when it decides to fall 50%, and then shoot back up like 20%. That's just the way this one goes. So I'll keep snapping it up if it keeps dropping for me. SRU, God, I would rather sell this one and move the money, or rather, I'd rather sell Empire REITs and move the money into this one. Smart Center REITs is a REIT that it's where there's always a Walmart on the property, and malls and big shopping areas for people. It's a well established Canadian company. I would like to have more of it. Again, I would like to have more of it at a lower price than what it is. It is a stock that doesn't move around a lot because it pays such a high dividend. So we are going to play the game of buy it cheap, buy it super cheap, as cheap as I can, and not to call the bottom, but the company and the PE reflects that it is not exactly growing, so that's that. VIG is something that I moved my Vanguard high dividend yield, VDY, to VIG. That it was just a better battery dying. It's just a better ETF for me to hold, even if it was maybe even a bit more expensive. I'm trying to get towards buying stocks with dividend yields, but not high dividend yields. You know what I mean? So I'm still looking for more of a growth side, but I would still like the company to pay a dividend. Apple's a great example. You know, 0.7% dividend yield. I mean, it's not a lot, but that adds up after a long time. And same with this guy, 1.7%. Home Depot, Microsoft, they own quite a lot of companies. Let's see if I can find it. Anyways, this was just one that I switched from VDY to VIG because I see more promise in VIG than VDY. I wanted a part of my portfolio, so here it is. XEQT, probably the most important part of my portfolio. This is my index fund. This is my all-purpose fund. This is the one that I pump money into no matter what's going on. I have 326 shares, $8,000, almost half my portfolio. It will be 50% before all my money's in. It has been underperforming. I'm almost stagnant in it. That's okay. All the other stocks that I'm buying are there to beat this. If the stocks above cannot beat it, let me rephrase that. If all these guys cannot beat XEQT, then I am happy that half my money's in it. It owns a partial of 4 other ETFs, highly diverse, somewhat like 9,500 companies, and at such a low cost of $26.50. They have a dividend yield of 1.68%. It is just a solid ETF to own if I'm looking for average appreciation, average of the stock market. You get the most average by owning the most companies, and this is the one that I own. It could have been VOO, it could have been SPY, but in this case for me, I wanted XEQT. They have a little bit more money in emerging markets like India and China, which I wanted because I'm young. I needed the diversification in higher risk, higher reward, growing and developing areas. This was the golden answer for me, and this is one that one of my best friends has led me to buy. He's a smart man. Not that he's an investor either, but to grow and learn about it. And after learning how to do some things, albeit very basic, I still believe that this is just a very good place to have half my money, that I don't have to think about, that I can truly just average in without any speculation. Anyways, guys, that's my full portfolio. So far, we're $500 up, 1.6%. Not bad considering most people are like 10% down. So pretty happy with myself. Pretty happy with the way that things are going and my new investment journey. And I've been doing it for only a year, and I'd like to do maybe this exact same style of video, twice as long as what I thought it was going to be. I'd like to do this exact same style of video every few months, or not every few months, once a year, and just see where I am, see what's going on, see if it's happening the way that I wanted it to, and keep record of the way that it happens. On my channel, I will keep making updates on stuff after I buy them. I'm not here to give you, buy this stock now. I'm here to tell you my story. I'm here to share with you what I feel, what I do. I'm not leading you on to do anything. And I think given the length of this video, I'm going to go and check out the sources, my YouTube sources, in another video. Anyways, guys, I'll see you guys next time. Bye.